Hello guys, welcome back. Today I'm going to teach you one of my best strategy I've been using to trade gold. It's very important for you to know that strategy, that secret I've been using for the past 5 years. And if you are trading gold, there are some little things you should know. And that is what I'm going to teach you guys today. So stay to the end. The first thing you have to know trading gold is the structure. You have to know how gold behaves, the movement of gold. It's very important. Now you can't just open your charts and because you know one or two strategies, start applying them on gold. It might not work that way. As a trader, you need to know one, the market structure, especially when it comes to gold, is very, very important. And secondly, your analysis, you have to start from higher time frame. Most of you guys, the mistake you guys do is you start from maybe let's say 1 hour time frame and all that. Well, I'm not condemning that, but trading gold, you have to look at it from higher time frame. It's very important because you need a wider view of what is happening. Okay, if I said higher time frame, I mean from monthly time frame, weekly time frame, daily time frame, then you can proceed to intraday. That is a 4 hour time frame, and you can use the lower time frame for your entry. So this is very important because I've been trading gold for the past 5 years, and apart from gold, the other pair I trade normally is USD JPY, the GBP USD. Okay, these are the three major stuff I trade in the market. Now, today is the last day. That's in the month of January, and it's very important we start from monthly time frame. So if you are a trader, I will always advise you to start your analysis from monthly time frame. Why? Because now we are entering a new month, and you have to know what might happen next month, next 2 months. Okay, that's why it's very important, or what has happened in the previous month. So it will give you an idea if you are to buy gold throughout the month of February or March. It will give you an idea. So if you are coming to trade, or any day you are coming, you have that you know already that okay, on monthly time frame, the month of February, gold might be buying or it might be selling. So on the other lower time frame, you'll be looking, your analysis will be how it will align with the higher time frame. That's what you'll be looking out for. Now let's start from monthly time frame. This is very important. Now if you look at gold, the way it moves, okay, so you can see the way it moves at times. So this is monthly time frame. Okay, this is not lower time. This is a monthly time frame. We can see why I'm starting from monthly time frame is because we're entering a new month. Okay, that's February, and we need an idea how the market might move. So gold, you can see after moving, you see that come down like a cup, give us a cup shape, and look at what happened after going up here. The same thing came down, then it picked up. Now, if you look at the month of December, you can see the kind of candlestick. Month of November, it started coming down, and December gave us a reversal candlestick pattern. Why this is very important for a monthly time frame? This is January candlestick, and if you notice, it's closing above uh, the previous months. Okay, and this is a bullish pattern. It's telling us that the market is going bullish because this January is trying to close above that of December, October, and November. This is very important, guys. Listening. Now, if it's going to close, and we can see this is a bullish move because today is the last day, month of January. Now, it means this coming months, there's high probability that gold will be bullish. That's the month of February. So you see how simple this analysis is. Already on monthly time frame, we can see what has been happening previous months to went down and peaked month of January. Now, February, my prediction is gold might be bullish. That is the first step. Like I told you guys, first understand the structure, the behavior of gold. Then uh, you look at it from higher time frame. So we can see that this is giving us a bullish move. So men looking at this, there's high probability that February will be bullish. So on monthly basis, I will be preparing to buy, but that is not enough. If you stop at monthly time frame and you try to initiate trades based on what the monthly candlestick gave us, it might be bad for you because market might still retrace to test this structure that's been broken here. Okay, this structure was broken, so there's high probability that it might come back to test it or even come to full retracement before going up. But I have an insight already that in the next coming months, gold might be bullish. Okay, now as a trader, you need to document this. Okay, your trading journal, you need it right monthly time frame, expecting gold to go up. Okay, based on the candlesticks we're seeing and the structure that has been broken. You are not just guessing. At least you say the structure has been broken. This structure has been broken, and you can see that it has closed above this. And you can see overall it's still a bullish trend. That is the first step. Then the second stuff is to move down to weekly time frame. Perfect. Now look at weekly time frame. That's where structure comes in. You can see the structure of gold. And one thing I understand with gold is most times doesn't come for full. You can see this guy stopped here. Okay. Now you can see it hardly comes back to this. And we know that if it breaks this, the trend is changing direction. Okay. It's turning from this uptrend to downtrend. Now, this is weekly time frame. And we can see the way this market came back retrace before started going up. Now, anytime it comes back to for a retest, you see that at least it will move a bit. You can see here. Look at the impulse. So now looking at this, in the next few weeks, after the retest, you can see that the impulse is somehow good. Okay. So it means in the next coming weeks, gold might be going up. High probability that gold might be going up. So meaning monthly time frame and weekly time frame, they are in agreement. And we can see the trend also. This is very important. The next thing is to move to daily time frame. Now, if you don't understand how market moves, when this guy started happening, you'll be thinking that the market is turning. You understand? Look at when the structure was broken. But on weekly time frame, there's no any indication that a structure was broken that the market will start selling. Are you getting it, guys? All what I even anticipated now as okay, sorry, I have to adjust it. So if you are moving from um higher time frame to lower time frame, at times you have to adjust your markings or the levels you have marked. Okay. Now you can look at yesterday. When this candlestick was closed above this yesterday, I knew that this market might go up. Okay, that it might go up. And now that's why I told you guys that even though monthly time frame or weekly time frame is telling you to buy, you have to really settle down and look at this very well. Now, daily time frame, look at the kind of candlestick Friday is trying to give us. If it closes this way, it means the markets might be retracing. That's why I told you guys that at times you have to move down to lower time frame. So if I start buying here, there might be problem because like I told you guys, look at gold. Anytime it breaks a structure, it will come back for it. You move to 4 hour time frame, you now have to start looking at the market from intraday perspective. So if you look at this, there was inverted head and shoulder pattern. This is the shoulder, this is the head. So if you see this, you will know that if you look at this carefully, it's as if a structure was broken here. The market closed below this, and if you're not careful, you're thinking that the market will start falling. But what happened? It went back to give us another shoulder. Then you will know that this is going to be a continuation pattern. And also, if draw a trend line, you will see that this market is still an uptrend. So I will advise you, it's very important you make use of a trend line. It's very important. Now I told you on weekly time frame, let's say weekly time frame, you'll be thinking like I told you guys, since it closed above this guy here, you're like, oh, the market is going to buy, you will jump into it. But if you move down to 4 hour time frame, you can see that there's high probability of market coming down here before going up. So now as a trader, we now have a target on lower time frame where we can buy. Okay, at least here is giving us a sign that the market might come here or put this trend line. So around this area, we'll be looking for an opportunity to buy. So you can see the way we started from monthly, weekly, daily, now 4 hour time frame. And anything from 4 hour time frame, you'll be looking for where to buy. Okay. But like I told you guys, you can't be buying on monthly, weekly, and daily time frame, even 4 hour time frame. It won't make any sense. Now let's move to 1 hour time frame. So on 1 hour time frame, already we can see that we are taking this area as a demand zone. That if the market comes to this side, we'll be buying. So now, if the market is going to move down to this side, all we'll be expecting is market to give us a downtrend pattern down to this area. Around this area, anything can happen around this area. So we'll be expecting the market to move down to this area. So you notice a downtrend on 1 hour time frame, or if we move to 15-minute time frame. So we can see already that it has somehow started giving us a downtrend stuff. So if it moves towards this area, we expect this movement, this downtrend movement, to change to an uptrend movement. So this structure will be broken, then gold will come back to retest. So as it's coming back for a retest here, this is where our entry would be. Okay, if it comes here, our entry likely will be around this area. So what you will do is to mark, if we are going to enter this market here, then our stop loss should be below this trend line, and this support level we highlighted on the daily or any or the higher time frame. Let me just put it that way. So we can see how much we are risking. Now let's move, I'll move to 1 hour time frame. So this is 1 hour time frame. So your first target on intraday should be here, because that's where we have a supply region. So the market might start falling. I mean, if the market reaches here, there's high probability that it might still retrace. So that is why your first take profit should be there. So on 4 hour time frame, the same thing. So this is the where our take profit should be. So that's if the price hits this guy and it decided to turn back, there will not be problem. Okay, but if it breaks this resistance or supply level here, we'll be waiting for the market to come back to retest it, then we have a real confirmation that okay, gold will be going up for a long period of time. But already, like I told you guys, from monthly time frame, we already knew that let me remove all these drawings. We already know, since it closed above this, that it might be bullish. On weekly time frame, we already knew that it has closed above some structures here. 4 hour time frame closed, but we can see that, like we said, there might be a retracement back to this area, or it might even stop here. On the 1 hour time frame, we can see, like I told you guys, it might even stop here and start going up. So what you do in that case is to move to 15-minute time frame. But you can see this market is still a downtrend on that 15-minute time, because this structure, you can see double top here, and this structure was broken. So let's wait. If it's closed below this next week on 1 hour time frame, we know that it will go down to the area we highlighted on 4 hour time frame as a demand zone or buyer zone. But if you start going up, then we look for another opportunity to pass. So guys, this is a simple way you can analyze gold. And you know that anytime gold moves, at times it consider it ranges before it will continue, and the next movement might be almost equal to this. You understand, like I told you guys earlier. So this is how you can approach gold. Very, it's not that difficult, but you know, trade comes with risk, and especially gold, because of its volatility. You have to calculate your risk properly and use your stop loss. Don't risk more than 1 or 2% of your capital. Depends on your risk appetite. Please, guys, don't forget to subscribe and follow, because I'm going to drop our weekly outlook so that you can see how we analyze other pairs. It's very important. So, guys, thank you and God bless you.